Hey everyone, welcome to the channel. I just blew up my whole computer. Whoops! 2025 is the year, and we are off to a horrible start. Not really. Look, if you want to know what's in store for 2025 and what the market here locally could actually look like, this is the video for you. Now, I feel like a broken record here because I've been saying this for quite a while now, but the real estate market here locally, actually nationally too, but specifically here locally, is broken. I've actually not really said it like that before, but I do like that actually. Yeah, it's broken. It's really stuck, and there isn't a very good answer for how to unstick it. It seems like time is the only remedy here. I'm going to explain everything about our broken, stuck market here in a little bit, but first, let's just talk a little bit about where we actually are. Headline news here. U.S. home sales in 2024 fell to lowest level in nearly 30 years. I was talking to a client on the phone the other day, and when I told him that headline, in shock, he just about dropped the phone. He said, well, does that mean it's a good time to sell or not? To which I answered, grapes. Because it's not apples to apples or oranges or even grapes, really. What the macro market is doing has almost nothing to do with whether or not it's actually a good time for him to sell or not here locally. Listen to this. Real estate is local. Now say it with me. Real estate is local. Yes. But before we talk local, we should talk macro. Because I mean, it does have some bearing on what's going on, right? 5% maybe bearing on the market, I guess. I mean, it has a lot to do when we're talking about interest rates, and it has a lot to do about that, but it doesn't have a, boy, this is a slippery slope. Whatever. Back to the macro. Let's start with macro. Nationally, 2024 recorded the lowest number of home sales nationally since 1995. That was a minute ago, huh? The good news is that number of sales is beginning to trend upwards. The winter market is, usually a lot slower, obviously, because people don't like buying when it's really freaking cold outside and there's snow everywhere. And
I've been out for maybe 15-20 minutes.
the landscaping just looks horrible, so it's not really a good time to sell either. Anyway, my point is that those seasonal numbers, those wintertime sales numbers, have been trending upwards over the past few months, which could be a good indicator that things are on the upswing. This could mean that potentially the bottom is in and we are about to start doing better. Because we have been on a long, slow decline in the number of sales that have happened over the last few years because of the interest rates and their sharp increase and the high interest rates that we've had over the last, 2.5 years? I cannot believe it's been 2.5 years, almost 3 years. Whew. And according to leading economic pundits, after 2 years of broad speculation that these rates will eventually come back down into the fives, it now appears as though we've all been duped. It doesn't really look like they're coming back in the fives anytime soon, and they're likely to stay in the sixes, maybe even in the sevens for quite a while to come. Years, potentially many years. And this is the big secret that nobody really wants to say out loud. So what does that mean? Well, it means that the glory days of 2020 to 2022, where practically money was free, are well over. We've known that, but the market just isn't going to bounce back like we kind of all thought it was. Totally guilty. I was really, enthusiastically hoping that the rates would come back down into the fives and maybe even the fours, and boom, bam, we'd be right back into a bullish market. But it looks like that's not going to happen. And admittedly, it's probably a good thing, because the appreciation that we saw back then at that time frame, 2020 to 2022, was absolutely staggering. It was ridiculous. It was unnatural. That's a good word for it. It was very unnatural. So moving forward, we can expect to see a very sluggish market. We've been saying this for years. The locked-in effect is real. People don't want to exchange their 3% mortgage right now and then trade up or trade horizontally or even trade down in value to another house that's in the 7% interest range. That just doesn't feel right. Nobody likes that. So the majority of people that are actually selling right now, the inventory that's coming onto the market, the homes that are for sale, are from people who have to sell. Not that they want to, but they have to. Usually it's some sort of a job relocation or some other event in their lives that are forcing them to sell. This means that of existing sales, we are seeing a huge uptick in the percentage of new construction sales. In fact, nationally, new build homes are making up about 30% of the overall housing sales, which is double the historic number of 15% annually. So back to why we are stuck and what it means locally. Think of the housing market like a teeter-totter. On one side, we have demand, and on the other, we have affordability, or really unaffordability. Right in the middle, we've got interest rates that are acting as the pivot point, okay? When rates drop, demand soars. More buyers enter the market, driving up home prices, making affordability worse. But when rates rise, the opposite happens. High borrowing costs cool down demand, which can help home prices stabilize or even drop, improving affordability. Right now, the market is balanced.
Perfectly balanced, as all things should be.
But as interest rates change, the seesaw will tilt. The question is, where will it go next? And how long will it take for this seesaw to move anywhere meaningful? This balance thing means that basically, even though interest rates are still at about 7%, there's still enough demand to counter the rates. So let's face it, a lot of buyers that I talk to want affordability to be better. Like, they want home prices to come down so they can buy their first house. But in order for that to happen, interest rates are going to have to get worse, like well above 7. I mean, 7 already feels painful. This is why we're stuck, because some people want affordability, other people want lower interest rates, and they're tied together. Even if interest rates went down 1 point, which would help a lot of people buy homes, there's so many people that are ready to buy homes. If you drop that 1 point, demand would skyrocket through the roof, and then we would be dealing with higher prices, because the more demand, unlimited supply is going to cause bidding wars and prices to go up. So now, we can finally talk about that local market. Let's pull up the chart here. This is the last 5 years of sales prices. You see that? That's free money in the form of 3% interest rates talking. From 2020-ish to 2022 and a half, yikes, that's a lot of growth. But then the rates shot up, and look, the market has been fairly level for the past 2 years. Even those little bumps, when I click off of the rolling 12-month average, I would bet money that they coincide with rate fluctuations. So even though the mortgage rates have shot up to 7, the demand has still produced enough buyers to buy up that limited inventory and keep the market balanced. This is super alarming because those of you who are out there thinking that prices are going to crash, nah, they're not. They're actually holding very steady and continuing to even rise a little bit. Now, the only saving grace that I can see here that adds some complexity to all of this is that the days on market and months of inventory have both steadily been going up since the, rate thing. So as days on market continue to rise, that typically forces sellers to start doing price reductions, which if the trend continues, could ultimately mean that lower sales prices will follow. In fact, nationally, we are seeing more price reductions than ever. However, here in Central Oregon, locally, this trend hasn't necessarily translated into actual closed sales prices. As I've said, we're actually still seeing prices increase just a little bit. Okay, so that's where we're at now. What will the future bring to the real estate market, both nationally and here locally? This is a really tough question. Probably more of the same, if I'm being honest. We don't really know what the new Trump administration will bring to the economy. Lots of speculation, yes, but we don't really know yet. What it may bring to a new Fed rate cut decision, right? All indications that we're kind of just in a holding pattern, which will ultimately mean that this next year's real estate market will basically mirror what we saw last year and the last 2 years, really. There are some who believe it will be better, and there are some who believe it'll be worse. I typically have a pretty good sense about this, and I'm not really sure. The ultimate decision will lie with the buyers and sellers of Central Oregon. It's not really a bad time to do anything. The market is still showing its resiliency. Homes are still coming on the market, although not as many as we've seen in the past. Homes are taking longer to sell, but not so long that sellers are getting desperate and price reducing it way down below and ultimately lowering home values. And buyers are getting more and more used to having to take that 6 or 7% mortgage rate out, and therefore are slowly beginning to enter back into the market. Really, I think that it probably could be a slightly better year then last. So look, if you need to sell, give us a call and we will get you top dollar for your house. If you need to buy, call us and we'll help you find your dream home. There just isn't really a reason not to. All of the FUD out there, the fear, uncertainty, and doubt, it can all just take a hike. We are here to take care of you no matter what the situation is. So look, thanks so much for watching. You know the drill. If you or somebody you know, doesn't have to be you, you can refer a friend. We would love to be your local real estate resource of choice if you're looking to buy or sell here in the area. Thanks so much for watching, and we will see you over in the next video. Be sure to go to krommrealestate.com to reach out to us, and we'd also love to see you connect over on social. Thanks again. We'll see you in the next video.